All right, good morning. It is Monday, January 27th, 2025. Guppy One Trading coming to you live here. It is 5:45 a.m. Central Standard Time. I've got a quick macro assessment for you, so let's get started. As you can see clearly, the VIX handle is elevated at 18.8, reflecting a clear risk-off sentiment in U.S. equity indices across the board. Um, right now, you're looking at the S&P futures. You can see after the Trump inauguration, we closed out on Friday with an indecision candle after a retest of 2024's highs before opening Sunday into Monday's open with a distinctive sell-off. And as I said, this is reflected across all indices. Um, at this time, we can look at the NASDAQ. It's literally the same price action almost here. A couple of green days after the inauguration and the Friday, and the sell-off here into Monday. Russell was a little bit subdued, but it's reflecting the same price action, pulled up a little bit, traded sideways, and sold off into today. Same deal with Dow Jones. And if we look at the price of bonds, we can see the bonds are skyrocketing across the board 2 year, 5 year, 10 year. Okay. And naturally, when the price of the bonds are skyrocketing, what does that mean for the yields? The yields are dropping across the board. Okay. And I'll show you one other thing before we close out. Like I said, this is going to be a quick macro assessment. I'm not going to go full on here. But the dollar in trend as is in a bull trend. However, right now the value of the dollar is depreciating. Why? Typically, this would reflect the stock market going up or gold going up, right? Or silver or something of the other odds, right? But in this case, um, the dollar is going down as speculators, investors, traders, and bankers seek guaranteed interest, okay, in the flight to safety of bonds. And that's why that is reflexive of the price skyrocketing as the equity indices sell off. That's what you're witnessing here. Now, um, I'll have to do a greater in-depth video about the relationship of the dollar to the bonds and the intermarket relationships of the currencies, the commodities, and equity indices. But clearly, like I said, look at the dollar. The dollar's going down. I'm sorry. The stock market is dropping. With that, the yields on the bonds are becoming cheaper or dropping. Therefore, the prices are rising. And this is investors, bankers, traders, speculators getting guaranteed interest, seeking the safety of guaranteed interest during a time of uncertainty in speculative assets, i.e., the stock market. There you have it, folks. That's a brief macro assessment for Monday, January 27th, 2025. Speak to you soon.